You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live at Masters in Trading Live. I get on here every day the market's open, 11 a.m. Eastern time, share my thoughts, go over the market, and once in a while we'll share our trade of the day. Just so you're aware, tomorrow, market is closed. Even though the market's closed, we're still going to be doing a Masters in Trading Live, 11 a.m. Eastern, so please join us. Market's really busy today. Very cool. I think that we're going to see this kind of activity all through March, going into the transition, going into the first month Trump takes office. I think that we're going to have a lot of what I call news bombs. What are news bombs? NVIDIA came out with a news bomb against quantum. It took all the quantum names down about 50%. So that's what I'm talking about as far as a news bomb. Today, I got a couple of things to cover. First, I want to cover Gamma Scalping. Great question in our Discord. After that, I spent the break thinking about a new tool that I wanted to create. And this last week or 2 weeks, I've been hitting it hard creating this new tool, and I'm finally done with it. I want to share what I created with you as well. Okay, let's go over the slide deck. Very excited about today's presentation. We also have the chat open, so if you guys have any questions, just throw them in the chat. I will be keeping the chat open as well. All right, Harry, Dale, Matt, Eric, thank you for joining in the chat. Okay, here we go. I'm going to start off with a Gamma Scalping question. After this, I'm going to share this brand new tool that I built, so stay with me. So, question. Guys, I'm hoping one of the experienced option traders would explain Gamma Scalping. I watched the video. So here it is. I buy a call at $50 for 50 cents. $50, buy one call for 50 cents. Let's buy 10 calls. If the stock's at $50 or the $50 strike and we buy 10 calls for 50 cents, that's a $500 investment. We can never lose more. When the stock goes to 7, let's say this stock goes to 7, 57. Your 50 strike options are worth $7 because there's $7 of intrinsic and then plus whatever extrinsic. So I don't know, maybe they're worth $8. Gamma scalping. When you're long 10 calls, it's the same thing as being long 1,000 shares of stock. It's the equivalent when you're long 10 calls. So when the stock goes from 50 to 57, you could sell 1,000 shares. You're long 1,000 shares, and now you're short 1,000 shares. Never touch your options because your brokerage knows that if the stock's at 57 and you're long the 50 calls, you're going to automatically exercise those. What you could also do, 50, stock goes to 57. Remember, you're long 1,000 shares. You could also sell 500 shares. Then your position is long 10 calls on the 50 strike and then short 500 shares, 57. Okay, these you don't touch. That's how you could scalp Gamma. It is a very, very valuable resource for retail traders. Okay. I want to talk about an indicator that I've been working on. And I put this together and I built this indicator, and so far, so good. And here's what it does. This tool, and right now I have it on the QQQs, it looks at realized volatility, implied volatility, historical volatility. And when realized volatility gets lower than actual volatility, we'll get some sell signals. When realized volatility gets higher than actual implied, we'll start to get some buy signals. So here's how it works. And the reason why I built this indicator is because I started looking into what's called realized volatility. So watch here. And Dimitri, I'll answer your question in a second. So historical volatility, what is it? Historical volatility is a measure of how much an asset's moved in the past. It's based on past price data, uses a standard deviation of daily returns, reflects what has already happened. Now, realized volatility. Realized volatility is something that we don't talk about. It's the actual observed volatility of an asset over a recent time period. The actual observed volatility. It uses daily returns to calculate the standard deviation, and it focuses on real-world vol and often reflects a trader's short-term view. Implied vol. It's the market's prediction of how volatile an asset will be in the future. It's derived from option pricing models like the Black-Scholes. It shows what traders expect for price swings. It reflects the market's expectation for a future price movement. Okay? So what I did is I wanted to compare the actual observed volatility and the market's prediction of how volatile that asset is going to be. And so when I built this, I put all this together, and that's what we have. And here's the QQQ. And how this works is the green arrows are triggered when the real vol is unusually low relative to implied vol. We also have an RSI indicates in there for oversold, and we also have a Z-scored measure in there to help with oversold and overbought. Red arrows are triggered when RV is unusually high. So QQQ. QQQ earlier in the week, we started to get those sell signals. And we didn't just get a few sell signals, we got a ton of sell signals, right? Pretty wild. And that came off really, really nicely. That was the QQQ. Right now, on this same chart, the QQQ just got a little buy signal. Sells off. Now we get a buy signal. A buy signal here. Is it aggressive? Maybe, but think Friday. We have a big number coming up. So maybe that's why the market is settling down right here. That's the QQQs. Let's go on and look at a few different charts. Etsy. Etsy was a trade that we shared on Monday. Monday, we shared a trade in Etsy to buy some puts. Why? Etsy was getting annihilated, attacked with sell signals. Sell. What ended up happening to Etsy? Etsy comes off huge this morning in our Discord room. It is time to get out of Etsy. Etsy right here. And then if we look at the original trade in Etsy, January 6th, buy to open Etsy right here. January 6th. Why were we doing this trade? Well, we're doing this trade because Etsy is giving us 6 different sell signals. What about Tesla? Here's what it looks in Tesla. A couple of times a little bit too early, but you'll even notice the market chilled out for a while, even came back a little bit. I mean, it wasn't end up being right, but remember, this is all volatility. That's what makes this special. It's realized volatility against implied volatility. What about the VIX? You can do this on the VIX as well because we're looking for short-term measures of movement. It's nice and disciplined. It stays on the edges. You can see here it was a fierce buyer, dying to buy. Yeah, this took me about 10 hours to actually build, but this is what I've been thinking about all throughout the vacation, is just trying to find a way to measure these short-term movements. Microsoft here gets aggressive. Didn't call the top, but it definitely got a little pullback. But here you can see it flipped sides. Boom. I also like that it's not giving you that sell signal every single time. It's staying disciplined. It's staying on the edges. So the market is constantly improving, right? The market, it's constantly growing. So even a concept like realized volatility. Realized volatility is something I was reading about over the break. I was always attuned to your implied volatility, your historical volatility, even your theoretical volatility. Theoretical volatility is the trader's anticipation of volatility. Realized was something I just started working on myself. And after working on it, I'm like, we gotta build a short-term tool using these awesome features. So the big benefit of having a community is everybody in our all access, you guys are going to get this gratis. I'm going to gift this to you. And what I'm going to do on this next portion of our all access, we're going to stay on here. I'm going to show you the exact specs of the indicator. I already dropped the indicator in your Discord, and we'll be using this going forward. So my gift to you, thank you for everybody else watching. If you're interested in joining our all access, you can reach out in the chat. Our buddy Chris Waters on there, or just leave a comment under this video. Thanks a lot for watching. Everybody in all access, you guys don't go anywhere. We got to get to work.